Hi, everyone, and thank you for joining us. As the founder and CEO of Crown Exploration, Shane Shanefeld has been an integral part of its 26-year oil and gas history. His family was in the well servicing business, then he attended Texas Tech University and received Series 22 and 63 licenses from FINRA. Mr. Shanefeld, thank you very much for being here. The floor is yours.
Hey, thank you. Hello, everybody. Got a little PowerPoint here. We're going to go through some advantages of oil and gas investing. Why Crown Exploration? Simplest answer is experience. It's something that you cannot buy, and you can't teach it, quite frankly. We've been in business since 1997. Drilled over 225 wells across Texas, Louisiana, Oklahoma, Colorado, and Montana. Our company, Crown, is comprised of talented landmen, geologists, regulatory counsel, as well as industry partners. Horizontal drilling with targeted fracturing maximizes pay zone exposure and recoverable reserves. That's kind of what we do in a nutshell, and I'll get into it a little bit more as we go along. But the horizontal drilling and targeted fracturing pay zones is something that is a must in our due diligence. Using some examples here as an investment amount, $100,000. And you'll see that on the left in the example. It says investment drill and test, 100, intangible drilling costs below that. Run this through with you guys real quick. If you're an accredited investor, if you're getting hit at the highest tax bracket and you're looking for a way to hedge against that to lessen the burden with potential income, this may be right for you. In this example, we're using a $100,000 investment. 85,000 of that $100,000 is intangible drilling cost. If you're at 37% tax bracket, times your 85,000 intangible cost, first year tax reduction is 31,450. Investment net tax reduction is the 100,000 minus the 31,450 is 68,550. You will not find these benefits in stocks, real estate, or really any other investment that I know of. These types of investments come with lucrative tax benefits. Your intangible drilling costs are 100% tax deductible in year one. Obviously, depending on your tax situation, I'm not giving advice per se on taxes. Everyone would have to get with their own CPA, attorney, etc. This is just kind of a broad example to kind of show you what that $100,000 investment would look like with deductions. Your tangible drilling costs are 100% tax deductible. Your depletion allowance is 15% of income is tax-free over the life of the well. That's thanks to the Small Producers Exemption Act. And your tax advantages are active income deductions against, and this is very important, something that you guys really want to take note of. If you meet some of these criteria with high taxes, looking for long-term income, they hedge against, or the tax advantage or active deductions against business income, salaries, capital gross income, and interest income. And of course, consult with your tax professional for tax advice, and tax benefits are subject to certain limitations. We have to say that. And this is your income example. So you had your $100,000 investment. So we know your tax savings where that takes you. Now let's look at the revenue side of it. Still $100,000 investment, 1% net revenue, using 1% in this example. In 1 month, the well produces approximately 3,500 barrels of oil at $75 a barrel, 15,000 MCF of gas in that 1 month time at $2.75 per MCF, and operating expenses estimated at 25,000. Your oil sales would generate $262,500. Your gas sales, $41,250, less your operating expenses. Your well income, $278,750 in well income. Your 1%, we're using a May production month here. Your 1% would pay $2,787. That's approximately a 33% return on investment, a 1 month or 12-month ROI, 33%. Obviously, market prices and production can vary substantially. They could, obviously prices can go up, prices can go down. The amount produced can go up or down. This is, again, just an example showing a $100,000 investment, 1% net revenue. Your production income monthly on that this type of example would be $2,787. So we've gone through the tax benefits as well as the income from the example. I'm going to get into a little bit of kind of what we do, or how we determine what to drill, where to drill, and it all starts with due diligence. And what do we look for? Crown looks for historical production, even production that was drilled long ago with older technology. Surrounding production, i.e. Industry term is well control. We like to know what wells are around us, what they produced, at what depth did they encounter a pay zone, etc. Lease control, are we able to acquire any more? Do we have rights to anything next to us? Pipeline, gathering infrastructure is very important. You could go drill a well and have say a lot of natural gas, but no one to take it, no pipeline to take it anywhere. So those due diligence things, it's things that we look for up front, before we go any further. How kind of we correlate that to this particular map is what you're looking at here is approximately 2 sections, 1,280 acres. We know we're surrounded by wells. All these wells that you see on this map to your left are producers. We have historical data, production data on all these wells. We know what they did. We have key wells that we look at so we can make a determination, are we going to encounter the same pay zone, the same depth, same production rates, things like that. And those are very important things in our due diligence and choosing acreage and choosing programs that we'd like to drill. To dive in a little bit further into this map you see on the left, you see companies like Chevron, Mallard Exploration, big name companies drilling these wells. They're very long, horizontal wells that we drill out here. And you can see the production, cumulative production up in the top left, the Mallard Anderson fed 1,072 barrels of oil per day. The Chevron well just to the right of that, the Dorothy, and I won't go through all of these with you, but definitely something to look at. 723 barrels of oil per day, 45-month cumulative of 295,000 barrels of oil. And you can see some of our wells we drilled. Ours are the Crown Niobraras. Current rate on one is 200 barrels per day, equivalent 100,000 BOEs, barrels of oil equivalent, as well as our number 2 wells producing between 250 and 300 barrels per day currently. But this is kind of an example of due diligence, what we look for, what a lease looks like that we may drill. As you can see, surrounded by production, we have a lot of data. We have a nice leasehold, over 1,000 acres to drill multiple wells. And those are some of the things we look for. And this is a schematic. Typically, this prior map and this map is maps that would be in our memorandum. This is just simply It's not to scale or anything, but it's just simply a visual illustration of from surface down to our pay zone, the Niobrara Formation. We drill approximately 6,000 feet vertically, and then an additional 9,000 feet horizontally. So the total measured depth on a well like this is 15,000 feet. So from the top all the way through the curve to the end of the lateral. And what you can see is you're obviously going through several different pay zones, several different structures, but our primary out here is the Niobrara Formation. It's an oil saturated limestone, and that's what we're going after. The 9,000 foot lateral exposes 9,000 feet of that pay. So typically in the past, you would drill a horizontal well, you would drill through your targeted formation, the Niobrara on this one, and you may have, anywhere from 10 feet, maybe 100 feet of pay zone to produce from. The horizontal drilling has really changed the game, exposing so much more pay zone. Obviously, the more you expose, the more you should be able to extract. Again, a 9,000 foot lateral on this particular formation. Crown experience, kind of who we are. What's in store for you guys? If you guys think that this is you have an interest in this, I welcome you to give us a call and talk about this. It's something. It's not a fit for everybody, but it may be a fit for you. It may be a fit for your tax burdens. It may be a way to open up long-term income, potential income. Again, I'll repeat, we've been doing this drilling wells 26 years. As a client of ours, you'll have access to our in-house team of experts. We have an investor relations center. It was revamped a few years ago. Someone answered the phone. It's not a pre-recorded message. Very nice. Again, our due diligence and kind of what we like to do, our philosophy is we apply new technology in proven areas. We try not to reinvent the wheel. We're not looking to wildcat, rediscover a new field, anything like that. We're trying to go into areas that we know are good or have been good and utilize new technology, new drilling technique to extract the oil and gas. You have access to premium acreage in Texas, Oklahoma, Colorado, and Montana. Our investments are offered through a licensed broker dealer exclusive to Crown. It's called Texas Securities. It's kind of hand in hand. Crown, we're the oil company side of it, but we offer units for sale through an exclusive broker dealer, federal license, all that. Wells can provide long-term monthly income. That's what we're here for. Oil and gas investments are 100% deductible over the life of the well. It's a hedge against inflation. And what we try to do, more importantly, is offer transparency every step of the way. Whether it's our drilling reports, access to your broker for questions, online center and support. We're here to help and to help you understand or help you feel comfortable in this type of investment. You can contact us. I know this has been kind of a pretty broad overview, maybe like a 30,000 foot overview. I don't want to ram too much of this down your throat because I think it's important to really kind of explore what we do and if it's a right fit for you. This isn't for everybody, but it does fill a need with a lot of our partners. Most of our partners, obviously look at this and tax advantages are probably one of the biggest selling benefits to it. But as we all know, there are other ways to get tax benefits or tax deductions. But what everyone really is looking for is the tax benefits in combination with potential income. And really that's our value proposition. We're able to give you guys great tax benefits, potential monthly income for long term at that. I again implore you guys to visit us at our website. It's crownexploration.com. You can speak with us on the telephone at 972-395-1133. See us in person. Our address is 4024 Nazarene Drive. We're in Carrollton, Texas. We're in between. We're just outside of Dallas, Louisville, Carrollton area, kind of all built into one. And or you could meet us at a well site too. We do well site visits from time to time. We always have a lot of clients show up for that, to get a firsthand experience of what we do. How big is the equipment we're using? How does the equipment work? And that's very important. If you ever have an opportunity to come to a well site or come see us in person, I highly recommend it. The photo on your left is our team, our Crown team at a well site visit last year, and this is pretty much us right there. Again, our website, call us on the phone, or meet us at the office. Kind of getting down to the end of it, I'll open it up for some Q&A. If anyone has anything, I'd love to hear from you, and I'll try to answer your question to the best of my ability.
All right. Well, thank you very much. That was a fascinating presentation. So our first question, do you mind sharing some thoughts on what you see in the months ahead for the oil markets?
I wish I had a crystal ball. It's a great question. I was reading earlier today that the prediction is oil should go up, will continue to go up. I think I'm in line in that prediction. I don't know where it's going to fall, but I know that 70s, high 70s. I think it'll continue to go up. I don't really see it going down. I think one of the things that really sticks in my mind is a few years ago we were down to during COVID years we were down to something like 800 domestic rigs running in the U.S. And obviously that was down, and it was definitely a slowdown in the economy and everything during that period. But we just haven't picked up the rig count back up to those levels. I think we're still hovering around 650 active rigs drilling, and the need for oil and gas is not going anywhere. I'm a big believer in renewable energies, and think we should explore that. But oil and gas is more than just fueling your car. I think most of y'all know that, and I think prices will continue to rise in the coming months and the coming years. Great question.
Alrighty, thank you. What's your minimum investment?
Typically we do about a quarter unit is a minimum. So I would say, anywhere from $20,000 to $30,000, somewhere in that range. But we do minimums. We're able to offer units. You'll be able to buy a unit, multiple unit, or even a fractional amount of that unit. So we designed that really for new partners. It's understandable, especially those that aren't that familiar with this, that may want to, try us to sample, to see kind of who we are, to make sure we do what we say we're going to do. They may do a smaller amount. They may do a half unit or a quarter unit, maybe $30,000, $20,000, and kind of get their feet wet on that. So we do make that available. Good question.
Thank you. So it seems like you're pushing the tax benefits. Does that mean that the monthly income may be on the shaky side?
Well, no, I wouldn't say on the shaky side. It's a good question. I think what you may hear is my reservation, and there are no guarantees. You're drilling a hole in the ground. There is risk involved, and I don't I don't want to ever allude that there isn't. So revenue is not a guarantee. You have to drill the well, complete the well, and then you have to have enough to sell, in order to have revenue. Now, is that a problem? Uh, no, typically in the areas that we drill, we make good wells. The question always comes back to how much? How much is your production? And that's the one thing I can't answer. I can't give you a definitive answer on. Is it going to be 100 barrels or is it going to be 700 barrels? You just don't know. Or, it could be 0 barrels. But we try to mitigate that with our due diligence, with the areas that we drill in, with the operators we use, et cetera, et cetera. So we try to mitigate that, but there is no guarantee for revenue. The reason the tax benefits are there is because you are taking a risk in drilling an oil well. So there is risk associated with that, and your reward is the tax benefits. It's kind of simple to say that, but that's in a nutshell, that's kind of the way I see it. Good question, though.
All righty, thank you. And what is your oil hedge price?
Excuse me, I don't think I heard that correctly.
So Tim is asking, what is your oil hedge price?
Um, I'm not sure how to answer this. I'm going to take a stab at it, and if this is not right, send that question back to me if you don't mind. I think what they're asking possibly is what's the price of oil in order to make a joint venture profitable, maybe. And it varies. It would vary depending on each project you did. Some projects, obviously, it would require more barrels per day to equate to a profit, versus maybe a shallower well, a less expensive well. So there's all sorts of variables that go into it. Just to give you a few up front is, you know, how much were the lease costs? What's the drilling cost, the completion cost? What is the lifting cost or just the transfer? There's so many variables, and yes, we look at all those variables. But to say there's an absolute price, I don't know. I will say this: back in '97 when we started, oil prices were very low. 10, 12, 15, dollars when we first started. And, we were profitable on some wells that we did, at $15, $20 oil. Now, does that mean that I can go in the Niobrara formation, the well that I just showed you in Colorado, and at $15 oil, is that profitable? No, probably not. But I think that's what you're asking. And it would vary. We have, over the last 26 years, we have not stopped drilling. We've always drilled, obviously some years more wells than others, and we've always found a way to make it work with the current market price. Hope that answers the question. Good question.
It does. Thank you very much. That happens to be all the time that we have for today, or all the questions that we have for today. But again, we really appreciate you joining us today. And if anyone has any questions, I encourage you to reach out to Mr. Schoenfeld via the links below. But is there anything you wanted to mention to wrap up?
Well, we're going to reiterate that, we're an oil and gas company. We specialize in identifying new and existing fields with substantial infrastructure. The infrastructure is a very important thing. We acquire leases, permits. We navigate the regulatory environment. We organize and manage each project. We also, from time to time, partner with experienced operators, which I think that's a great way. If your operator's putting up their own money, they're buying, 10, 20% of a program and going along with you, I think that's a good deal. We always look for that as well. We rely on about 150 years of combined oil and gas experience to successfully acquire and drill our oil and gas well. And again, I welcome you guys to look us up, give us a call, check out our website. I've got plenty of guys here, guys and girls that would love to talk to you and see if this is the right type of investment for you. I appreciate you guys' time and thank you very much. Look forward to hearing from you.